Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Chief ETF Strategist Todd Sohn. Todd, how are you doing today?
Hey, Ross, I'm great and always a pleasure to speak with you.
Good to talk to you as well. A lot to get to. I think we need to start with the rotation in markets that's going on, and maybe it's a twofold question, but I actually want to start with the tech and software weakness. We still hear a lot about AI. The companies are still massive, but what sense are you getting from this software sell-off? Should people be leaning in? At this point, what's your take on the whole software sell-off that we've seen?
Yeah, it's been quite the move lower. I think with software, listen, they're deeply oversold up and down the cap scale. From our work, it's very difficult to want to then embrace a rally. Typically, you'll see an oversold bounce, and ultimately, historically, when you get groups that fall off like this, they will bounce and retest those lows. So I think you want to be patient. If you wanted to try and dip your toes in, sure, but I would expect a lot of more chopping around, a very non-linear path for software to try and rebound. I think the good news is while software is correcting and perhaps weighing on some of the headline indices, you're actually seeing really good participation away from tech and large cap growth to some extent. New highs are actually expanding within the S&P. So things are still broadening out, and you may not see it at the headline index, but internally things are still on pretty good and firm footing.
Yeah, this is something people have been waiting for years. Is breadth in the market, is value sectors, small caps, things like that working. Another place in the market that's working quite well that we've talked about before is international. I want to get a sense of, obviously this move last year has continued into 2026. What is your sense of international markets versus US? Is this a head fake, which we've seen at times over the last 15 years, or do you sense that this move might have some staying power?
We like to believe it has staying power, right? If you just take a simple tally of the number of new all-time highs coming from emerging markets, Canada, Europe, and Japan, they're all working together. And it has been years since that's actually happened. Usually you had one region working, but the others were not. And so all these are finally breaking out. And you're seeing pretty good reallocations in terms of flows to international. I think investors are really realizing, hey, it's a great time to diversify, right? You're going to get less tech exposure abroad, but more industrials, more financials, and more, say, consumer and consumer technology type companies, which could be AI type beneficiaries for whatever that's worth. But I think this move has staying power. Was it stretched in some areas? Of course, Japan getting a little bit stretched, that's been powerful. But we would look to use weakness opportunistically, just given how important structurally these moves are, back to new all-time highs, finally working again and participating along with the U.S.
Yeah, so global breadth, basically everything working, but some of the big tech names and the software names. We spent most of the last couple of years talking about, is this a bubble? Is this AI rally speculative in nature? A lot of your work involves looking at flows, engaging sentiment to kind of answer that question or help answer that question. What are you seeing, particularly amid this software sell-off, from the sentiment indicators you look at? Are things frothy? Are they measured? Is there fear in the market? What's your sense of things?
I think it depends where you look. Overall sentiment to us is a little bit aggressive, right? I think that's a risk heading into the second quarter, whether it's through investor surveys, overall ETF flows, the options market. That's a risk. Tech, which has come off of the boil, I think, because you had very aggressive ETF flows. You had magazine covers saying AI was the person of the year, right? That's a little bit aggressive for us. Meanwhile, you are seeing a pretty good, what I would describe as a sugar rush to all these other areas that really haven't worked. Industrials, which have been all right, but frankly, energy and healthcare. And so while some of the flows are perking up in those corners, they have been off the field for so long that we think that there's legs to these areas of the market, and they can fit into value, they can fit into small cap. So overall, yes, sentiment can be a threat into the next quarter. That's a little bit more harder to time at tops than at bottoms. But generally speaking, this participation from these other areas are really working. And let tech come off the boil here, right? Software certainly has. We'll see if it translates into the semis or not. But a lot of the stuff that said, hey, let's get a little over off sides here for tech is finally manifesting itself. Just stay patient there and continue to look to the other corners of the equity market, whether it's domestic or international too.
Todd, this has been super insightful as always. Thank you so much for the time. We'll look forward to talking to you again soon.
You too, Ross. Thank you.